because they're in another world time zone wise. And again, this will be driven by your request. So if there's a symbol you want me to put up there, don't be shy. All right, I do have the first request here for natural gas. So let me switch on the recorder. We'll begin in about 30 seconds, right on the hour. Oh, I see. We're already being recorded. Okay, that's good. Tracked by the NSA. Good evening. I'm Rick Ackerman, the editor and publisher of Rick's Picks. And tonight we're going to have what I call a request session. These are events that I do hold on an occasional basis for subscribers. They're very popular. Subscribers come to me with questions about how this stock or that stock looks. And with any luck, 3 months later, they'll report back to me that they've made tons of money. So keep in mind that a lot of the forecasts that I'm going to give you, I have no real stake in most of them. So they'll be, not that I'm not objective in any case, but here you might call me a disinterested forecaster. So you might be able to take that to the bank with luck. All right, so this session is being recorded for those of you who either fall asleep or couldn't get here. I'm going to take a look first at natural gas. So the symbol for this would be the October contract. And I want to get a look at the big picture first before I start guessing what the smaller picture might portend trading wise. This looks pretty healthy and good rally. If we go to the weekly chart, you can see, well, actually I have to show you a continuous chart, but natural gas is in probably a dead cat bounce. On this daily chart, it looks pretty good, but if we were to go to continuous weekly chart, let me just show you how this thing looks longer term. You can see it here. We get a bit more. I'll put it on a weekly chart so you see even more. So natural gas is really toward the lower end of its range going back 10 years. And we see that its bottom typically around $2. In this case, back in 2016, it really plumbed the depths there at $1.61. So looking at this chart, we have a very promising formation because any trend leg that I see that gets past 1-2 prior peaks, as this one has generated what I call a bullish impulse leg. And with that dynamic, it's assumed that any pullback is going to be a buy. It will be corrective and is not assumed to be going beneath this low. In other words, I think this low is going to hold. The actual low on the continuous contract was about $2.03. So any pullback will ostensibly be a buy. And of course, we have a lot of ways to determine exactly how and when to buy. That is something we regularly take up in the Rick's Picks trading room. And if you want timely advice, you might want to check in the room. We do offer a free 2-week trial subscription. If I come down to a lesser chart, I'll show you just an example of how we might trade it. In this case, I'd use what's called a reverse ABC pattern, and I'll be looking to buy anything that kind of takes a stab down. It winds up being a very low risk way to get aboard, but we're correcting, and most immediately the pattern that makes the most sense to me for projecting a good rally target in this bull cycle begun in August is 2.75 or $2.75 per zillion cubic feet of natural gas. So typically, well, this is a little bit risky, and I think the best buying opportunity is going to come after this downtrend takes out the point C low of the pattern that gave me that $2.75 target. All right, moving to the next request, GDX. We follow this pretty closely at Rick's Picks. There's a lot of trading interest in it. The last trade we did, we bought calls somewhere around here in August, the beginning of the second week in August, and most everyone who, every subscriber who was in on that trade at least quadrupled or tripled or quadrupled his money, and those who held out for the full move really did well. But since then, and we did get out pretty close to the top, but since then, GDX has been a little bit tricky. I keep wanting to see a breakdown below this key low, ostensibly a support at 2604 that occurred back on the first day of August. We're always guarded against the possibility that this thing is going to take off like a bat out of hell, stranding not just stranding bulls, really. It's the true believers that get shut out early in a bull market because they become so despairing in reaching the end of the bear market that always gives way to a bull market, that they don't really believe the first rally. And as soon as that the beginning of a fabulous bull market begins, they're out on the first 5 or 10% of the move. So we're always guarding against that. And I do think that this move in gold is for real. I'm not a gold $5,000 an ounce or certainly $50,000 an ounce. I'm more a $2,000 an ounce kind of guy, but that should be bullish enough to see you through some pretty good times. So GDX, typically we buy calls just a week or two out. I never advise buying options unless we expect to be profitable within about 90 seconds. In other words, the best time to buy them is at turning points where the instant you bought, you're getting upticks in the stock, and if you bought calls, they'll be profitable. So I like the stock, but I want to see it break down and shake out just the last remaining bulls before I take a stake. If it breaks below that low, we have what we call a counterintuitive trade to get on board. Again, if you want to know more about that, stop by the Rick's Picks chat room. All right, let's see what else we have here. David wants to know about 5 stocks here. I'm just going to take the first one, and if we run out of requests, I'll come back to some of your other requests, but let's see what we have here. All right, that PD means partial data. TradeStation is kind of building. This is a little bit weird because we should have wanted this high to get past that high right there to create one of those impulse legs that I mentioned earlier. But the big pattern is still, and I'm going to start here. I typically don't take the lowest low you see on the chart. I take what I call the one-off. It gives me much more accurate targets, reliable targets. Here, you had a nice, what I call a mechanical buy at the red line. I probably would have advised you to buy it back in August 26th. And the stop loss would have been somewhere around here. But the trade worked. And right now, I'd be forecasting $82.09 on Qualcomm. But because of the clarity of this pattern, I'd be pretty careful about holding up there. It's a good place for covered rights, but you at least have almost 4 points of upside from where we are. And the method that I use, this hidden pivot method, just ABCDs, is very much my own creation. It's evolved over the 15 or 20 years that I've used it, and always with an eye toward finding easier, less risky ways to get in on a trade. It is the ABCD pattern is familiar to those of you who are use Gartley methodology or something called Lindsay's Trident. It goes back to the 70s, but this is my own adaptation of it, And I find that when you adhere to any particular system for long enough, you really get to master it. And it's akin to dropping anchor in the same place every day. You get to know where the fish are. And the advantage of any trading system is that it gives you that fixed vantage point from which you can observe things that are consistent to your vantage point. So it's really the best way to learn, to see market price action through the lens of a particular discipline of a system. So that's really the main value of it. And you know, if you use directional indicators or stochastics or whatever, if you did it as diligently as I've done hidden pivot analysis for 20 years, you'd be a Zen master of stochastic analysis. And the system I use is also very simple. I don't use oscillators or trend lines, channels, flags, none of the classical formations. I don't even use volume. It's all price oriented, but it gives me some very accurate calls, and as my subscribers will attest. Next stock, a gold vehicle, JNUG. This is the Junior Gold Miners Triple X Bull Index, and I'm not a Triple X fan. All these 2X and 3X vehicles were created with one purpose in mind, and that was to suck in rubes who think that they can trade gut trend hunches using options and make money. I've been trading options for 40 years, and believe me, it takes every trick that I have learned in those 40 years just to have a mildly positive expectation on a given trade. So if you think you're just by being bullish and buying calls, you can make money, well, you'll find out soon enough that that's not the way to go. All right, so the 2X and 3X is kind of seductive, but when you get sideways patterns, and notice that today, this JNUG is trading about the same place it was a little more than a month ago. So puts and calls, yeah, you had your big move there, but if you're typical, you're getting so excited about all the money you're making that you miss your 4-hour window to exit the puts or calls, and then the next day things come back into line, and you're thinking, well, okay, I'm even, but how much can I lose? So anyway, to look most recently at price action here, the pattern that makes sense to me for trading this thing kind of short term is right here. And you'll notice that we had a turn from a bit below this red line. The red line is what I call midpoint pivot, and it's the most logical place to come in there and do some buying. But let me also say that that this has tripped a mechanical short at the green line. So in other words, if I were playing it strictly by the book, I would have shorted at $65 and looks like 94 cents there, with the stop loss above this high, this point C high of the pattern A, B, C. I'd have stop loss in at 70.06. It may or may not work. If it doesn't, chalk that up to it's another lesson learned. But strictly speaking, this is not a bad little short at the green line here, and I call that a mechanical short. If you want to find out more about the mechanical short entry, drop by the Rich Picks chat room. Or I'm going to give you another way to find out more about it, by the way, at the end of this presentation. All right, Apple, over the next few weeks and months, let's see. I've followed Apple pretty closely, and I did put out a bit because I think of it as a bellwether. And it was a bellwether when it was a great company, and it's a bellwether when it's a crap company, which it is now. You know, these guys couldn't innovate themselves out of a wet paper bag, and their new big thing is streaming content, going up against some very well-established tough players. Even the tough players like Netflix have bid up the ante so high that if you want to hire creative talent, you wind up paying someone like Chris Rock $40 million to do 2 one-hour specials. So I don't think there's much room for big profits, certainly not profits in the ballpark with what Apple makes selling ridiculously overpriced hardware. So, you know, Apple's latest iPhone 11, when they talk about technological improvements, they're really talking about getting a slightly better depth of field focus in one of the umpteen cameras that are now on the iPhone. So, I really have contempt for Apple as a company, but for sure they still sell a lot of iPhones. It's just that the replacement cycle is going to continue to lengthen, and that will take its toll on their earnings. Yeah, they're making plenty of money, but and as much as I hate the stock, let me show you what my target has been on it, and I'm pretty sure it's going to get there. 242.48 is where it's going, and I have enough respect for Apple as a stock market bellwether. It's basically a proxy for what all the chimpanzees like to buy, the institutional chimps who are essentially told what to buy, and they can only walk and not chew gum at the same time. They just have a few themes that they stick to, and one of them is just buy Apple no matter what. So I think the stock has got a good 10% move ahead of it to 242.48. So I'm not even going to get too bearish on the stock market until Apple gets to its target. Why am I so sure it's getting to 242.48? Well, I'm going to give away a secret of the hidden pivot method, and that secret is that price action at the hidden pivot midpoint. We've got this A, B, C, D pattern, and the midpoint of the CD leg is calculated by simply taking half of AB, adding it to C, and the midway point is 217.53. We see that the first time the uptrend encountered that midpoint resistance, it blew right through it. And I don't think I've seen, maybe once in a blue moon, you'll see this happen and it doesn't get to D, but I'm pretty sure this thing is going to get to D just because of the way buyers and short covering handled that D resistance the first time. You see it came back to it, it tested it, it's now support. Even if it were to dip below it and fall all the way to hell to the green line, 205, that would be a mechanical buy signal on Apple, stop 192.57. So that is my outlook for Apple. And you notice that I don't do a lot of hemming and hawing with these predictions. I can usually be pretty decisive, and there's certainly always something to trade depending what time frame we want to be in. Prophecy Development Corp, a request from Paul, and that symbol is PCY. Oh no, that's Invesco Emerging Markets Sovereign Debt. Okay, well that's interesting. Oh, I see you. I see. Your symbol was on the Toronto Exchange, so I can't really give you that. And I'm sure you don't want Invesco Emerging Markets Sovereign Debt. So if you can give me the equivalent, the U.S. symbol for it, I will. Well, let's see if I can find it here. All right, so it has an over-the-counter symbol, PRPCF. And we've had quite a move here the last couple of week and a half or so. And let me take a look and see what the stock has really been up to. All right, spectacular move, but look at it in the context of the market. This is a stock that used to trade upwards of $5, and of course it's been skittering along the bottom here for years, and it's got a little bit of liftoff. The reason I think this liftoff might be the real deal is that we have a pretty good impulse leg, A, B, that got past, as I mentioned earlier, 1, 2 required peaks. So I'm going to take this rally at face value. And let me make sure I'm grabbing the right highs and lows here, because they are, in this visual context, inscrutable. All right, that's good. All right, so anyway, I like this. I kind of like this. I wish I didn't have to use the marquee low, the lowest low. I wish there were another little low right here, but this is good enough for government work. And I like that this stock Again, we've seen it pop right through that red line, the midpoint pivot. So that's a very good sign that this thing will go to 58.56. It'll eventually reach that target. So this is a good one. Those of you who are here wanting to look at other stocks, you might, it's perfectly okay if you want to study this stock yourself and see what it might be worth to you. But I like it. I think it's going to 58.56. And if it were to pull back right now, the green line, major correction to 22 cents, 22.74 cents, I would be a mechanical buyer with the stop all the way down there at 1080. We can take this on a smaller time frame and do the same thing. We can look for red line midpoint resistances that occur in lesser charts and use the same idea as essentially mechanical trades. Let me show you if that's possible here. Somewhat. I need to come down even lower to get clear patterns. So I'm going to go on the 60, which I think is where we were to begin with. And the only thing I see that makes sense to me, and it'll be pretty obscure to those of you who are not ace pivoteers, but I like this here. And if you want to find out the proprietary reasons, you'll need to take my hidden pivot course. More about that a little bit later. So you see, if you'd asked me a week ago, what do I think? I'd say it was going to 37.7, but be careful when it gets there. And a word of caution might have helped you there. The actual high was, it occurred less than a penny from where I would have expected a tradable top. But again, looking at those bigger charts that we saw earlier, the stock has big things ahead of it. And you should look at any correction as just that. Request from Scott for AAL, American Airlines Group. Boy, do I hate them. The more you fly American, you just, I don't want to get into it, but boy, do they suck. All right. It took me 16 hours to get to Philadelphia from Florida last time I made that trip. And it's not even the on-time thing. It's really the way they conduct business. And I know that that's a tough, very competitive in the airline business to be the worst out there, the scumbag of the business. But American is all right. So we've got a pretty well developed impulse leg here, and let's see. And I think, well, I just got done telling you, I'm always good for a clear call. I never try to hedge my bets. As Frank Fitzgerald, a fellow Pacific Stock Exchange trader, used to say, spreading is for people who don't know which way the stock is going to go. Thank you, Frank. All right, so this is the one that interests me, and I just want to check on something. The low there is 27.70, and the low here is 71. All right, so this low breached that by a penny. And one thing my own method has in common with Elliott wave theory is that we darn well know the difference between an impulsive move and a corrective move. So this move down is impulsive relative to this low, and we should have popped. We could have traded it. I have a good way of getting a piece of this rally from that seemingly in the middle of nowhere low. Well, not quite in the middle of nowhere. We've got those supportive lows, but I think it's going to go lower. If it breaks the 27.93 midpoint pivot, look for this stock to correct all the way down to 26.61. Goldman Sachs request from Joe. And again, some of you are undoubtedly experienced enough traders that you can take the things that I'm putting out there and run with them. You'll know from the way I present them whether I'm really hot to go. There are stocks where I would definitely take a position. Let's take a step back in Goldman. This is all noise. We got past a couple of minor, what I call external peaks, but this is the most important one up there. And for all the Sturm und Drang here in Goldman, it's yet to do anything impulsive. But the uptrend still deserves some respect. Let me, I hate to respect Goldman for any reason, but you got to do what you got to do. All right, so I'm looking for a one-off A. That is my sentimental choice. And here I found one that you need a microscope to actually locate. And I'm going to put that up there. And I'm just going to take my cue from the big pattern. Same really powerful idea applies here. Whatever happens at the midpoint pivot, the red line halfway between C and D, is a good indicator of what's going to happen henceforth. Here we see a struggle. It didn't exactly pop through. So I'm not going to guarantee you that the stock is going to reach 235.05 as I did Apple reaching 242 and change. So here it's just kind of a trade. There's no question about its bullishness. But the thing to note is that it's really pretty chicken shit here in that the rallies are not getting past previous, what I call external peaks. The important external right here was these few highs. And you can see that when it popped here, instead of going the extra 0.3 of an inch to get by that high, it chickened out and went lower. So, so it was, well, I'm not going to get into mechanical buys on this, but I mildly like the stock, but I have my doubts it's going to 235.05. That would be my max target. If it did get up there and you happen to have held a long-term position, very good time either to bail out or to do covered rights. All right, request from John for UEC. And this one is not rocket science. I've got a very lovely pattern. If you want to find out why lovely, then again, you might want to consider the hidden pivot course, or at least coming to the chat room to ask some questions. All right, I think this little mama is going to 65 cents, and I would be inclined to short it. If it pops to 107, my stop loss would be at $1.22. And actually, I'm going to adjust that because if you've got a system that can give you highs and lows to the exact penny, you may as well use it. So there is the true A for this pattern. And it's slightly different, not much. But again, I think it's a not bad short at 108, stop loss 122 for a ride down to 67 cents. And well, that's as much as I want to say about that, lest I confuse you. Soybeans request from Joel. All right, let's take a look. I think the November is the contract we want to be looking at. And the hidden pivot method, by the way, will get you in or out of anything. I don't care whether you're trading leaps on gypsum wallboard or the 1 minute bar chart of the NASDAQ E-mini futures. The method works for virtually anything you want to trade, any time frame. Here, it's generated a series of what I call reverse ABC buy signals. And I just want to see if we would have made some money on these signals. This is very proprietary, so I'm not going to get too deep into it. But we would have bought here for a ride to the red line. We would have bought here. No, not really. We would have bought the slight breakdown there, the low that slightly broke below that one. It got in at the green line, out at the red for a small profit. And we would have bought it the third time, and this would have been our big one. But typically, you can do these trades if you get the beginnings of a good pattern, which we had here, and just keep getting stopped out or making money, as the case may be. But it'll keep you busy, keep you trading, give you something to do that I think has, not I think, but talk to a subscriber about this. It has very high odds of delivering a winning trade. So the bigger pattern, good impulse leg here, because in this case, we didn't get that chicken little effect. This thing, wrong metaphor, but a chicken hearted effect. This is a good impulse leg. It got past not only this external, but the more important one, somewhat more important one up there. So the pattern I'd be looking at to get soybeans number is right here. And I'm going to take away the little pattern here so you can see things better. We got to stall exactly where we know they're going to occur, right at that midpoint pivot. We could have been short soybeans there with a pretty tight stop loss. Good way to trade against the trend. We could have been short using what I call that reverse ABC pattern, but in any case, we don't have enough of a penetration of that red line to infer that 955.25, the D target of this pattern, is duck soup. I have a feeling that that's where it's headed, but again, I want to see it pop through 903 and an eighth basis the November contract before I get too aggressively confident about that. Laurel wants to look at TEL, which is Telluride Inc. I guess, I don't know. A friend of mine used to work for Telluride Ski Corp. Maybe that's their new name. Oh, no, I'm sorry, Tellurian. Okay, I'm going blind when I get more than 18 inches from my screen. There's no question about this one. It's got a really powerful impulse leg. It's so powerful that instead of shaking out all the bulls and spending a lot of time torturing them to death, it couldn't resist going higher. It pulled back for 4 days when it first hit that red line, but you can see it's powering through. And I would say the only reason it didn't pop through the red line the way we might have expected is that this impulse leg, the AB segment of this bull cycle, is so powerful that everybody's a bull. So when it corrects like everybody wants it to before they buy some more of it, and it still manages to go up with 1,000 bulls hanging on its back, you have to understand what kind of buying power is behind it. So I'm going to guarantee you this thing's going to 1040 at least. And if it pops through that easily, then we're going to want to use perhaps even a bigger pattern. Well, all right, this gives us, and this is the pattern we want to open up. When we see really powerful moves in shorter time frames, we want to look at the possibilities implied by bigger charts. So here, I'm going to give you 1550 as a good target to shoot for. That's where I think this thing is going. And if it pops through 1550, you've got a shot at 25.81. One of the ways we play this, by the way, in a trading sense, is to use ABCD patterns to get on board like teeny tiny patterns with commensurately teeny tiny entry risk, but to sometimes catch a ride on the mother ship, this really big pattern. So we might use what I call a camouflage pattern. We might make entry on a 5-minute chart using a nice ABCD, and we'll get out of 3 of 400 shares. We'll keep 100 to swing for the fences. The fences in this case is 2581, or certainly at least 1550. All right, we've got a request for Equinox, and again, I can't do that. I can't call up Canadian, but let me see whether we've got a US symbol. Equinox Gold Corp. All right, so EQXFF. Haha. Yeah, right. I don't know. We're going to have to give this one a little bit more time before we. I mean, don't get me wrong. We can be geniuses about where this thing's going, looking on the little charts, and there's always something to do and something to know and something to forecast. So if we get on to 60 like this and apply some. Come on, honey. Holy smokes. I'm not even, I mean, I'm not going to say I'm not going to touch this because it's being driven by wackos. We like that. The hidden pivot method is such a great way to make sense of fear, greed, and absolute lunacy that I'm going to tell you now, we can absolutely get this stock's number, but I'll let you do it instead. Stan Hill, request for ego. Thank you, Stan. That's Eldorado Gold. And I like gold, by the way. I think I've given you that the sense of that. I'm looking for 1622 on the December COMEX futures contract, but it's struggling. It's down toward the lower end. And as I mentioned earlier, I'm thinking maybe it's got to break down before it can go higher. You're not the first person who's asked me for Eldorado Gold, and it's still just being a little son of a bitch here as far as how do we trade it. But again, we don't fear it because we know what it's going to do. We know it was going to sell. I would say jump in there at 766 and use this. Well, if it stops out below 745, I'm not going to like this thing any less. But using that key idea that I keep mentioning, what did the stock do the first time, in this case, a downtrend encountered the midpoint support, the red line? It just plowed right through it. It never got much above it when it was trying to correct upwardly. And it just looks like 766 to me. But we don't have to chisel that in stone. As soon as it starts making impulse legs on the way up, that's a valid reason to trade, at least to scalp trade the bullish side of it, no matter what we might think of a somewhat bigger picture. Don asks about Green Thumb Industries, symbol GTI. Well, there's something wrong with your symbol there, Don, but let me see if I can get the correct symbol for it. Green Thumb. GTBIF, that's an over-the-counter stock. And that PD means partial data. TradeStation is just trying to pull in data to draw a chart. This one couldn't be more clear than it is. A little bit of a struggle getting through P, but it popped through P2, the secondary pivot, with such aplomb that I think we're going to at least 11.1602. This pattern has such clarity and such textbook comeliness about it that I would really be careful. It's going to stall at 11.1602. So I'm guaranteeing you two things. That word guarantee, I take that back if there's a regulator in here, someone from the SEC. But yeah, I'm just about guaranteeing you 11.16 on the upside and a pullback from within 3 pennies of that price. Come back in a month and tell me how we did. All right, I already mentioned JNUG and Yaman, a very popular stock, as well as an institutional favorite. Good A up there. I mean, good BC. There's no question when we draw our lines where the BC is. The A, there are a few of them. I'm going to take this one down here as optimistic as that implicitly makes me. But Yamana looks like minimum $3.87. And it hasn't tripped one of those mechanical buy signals, at least not on the pattern of degree that we're looking at here. But if it pops through 387, especially if it does it with a lot of daring do on the first try, then you should be shooting for 478 because that's where this thing will be going. Srinath, I already looked at Apple, so if you want to catch up with that, just view the recording that you'll get a link sent to you. Crystal Lake Mining from Lorraine. Let's see what we've got here. I want to get the weekly to kind of eliminate all the filigree here. And the kind of gnarly pattern that makes sense to me is right here. And you've got a little bit of a wait before we get to the promised land here. I think the stock is going to be, it's going to get cut by quite a bit here. Trading 1130, it really looks to me like it's going to fall all the way to $6.96 before something, news, maybe a death in the family, breaks its fall. You don't have to chisel that in stone. There are alternatives, one of which I can take a smaller pattern, this one right here, and well, this 923 midpoint pivot is not as useful because it coincides with this low that all of the riffraff, hoi polloi, and village idiots will be looking at. We typically, when I call them hidden pivots, before we use them, I like them to be hidden from the view of most other traders. And in this case, our beautiful buy right there pivot coincides with a too obvious spot. We can still do the counterintuitive trade to get long. If you want to know more about that, then stop by the chat room or take the hidden pivot course. Again, I'll give you some details on a great package that will allow you to do that. We've got a reverse ABC trade possible in Ollie's Bargain Outlets. That request from David, and here's what we do in this stock. It tripped on the weekly chart, a reverse ABC buy at 65.10. So I'd be long here. I'd be losing $3.40 per share, but I'd hold with it for a shot to at least 75.93. Jen wants to look at RCL, Royal Caribbean Cruises, and we just happen to be, I guess I'm stuck on a weekly chart, which is a nice place to be stuck. It really gives us kind of the big picture perspective. But keep in mind, anything that I'm doing with a weekly chart, I can do with a 1 minute bar chart if you're interested in scalping and a shorter time frame. All right, so here, it was absolutely, I mean, this is a lovely mechanical buy. It was a mechanical buy on the pullback to the green line, which occurred at, let's see, at 106.51. So we lost a little initially. We're up a few bucks now. We're up $6, 600 shares, or $600 per round lot. And I'm shooting here for at least 123.54. I take half of the position off. And if it pops through that, you'd be shooting for 157.60. That's pretty ambitious, especially since this stock did not exactly plow through the red line on the first trip through it. So, but we'd be looking for at least 123.54. You're not getting the same odds though if you just get in here because I've told you, hey, look, this thing's going to 123.54. It will, but you got much better odds buying $6 lower. So I wouldn't jump in. You could jump in belatedly, but we would need to do it with a smaller pattern. We'd need to make our entry using, let's say, the hourly chart. And if you want to find out how to do that, again, you've come to the right place. That's our specialty, is doing whatever we want, whenever we want to do it, with risk held to a bare minimum. We've got so many ways to skin a cat with the reverse ABC entries, and essentially, and also these entry tactics that work in charts of all degree. Here, TLT, I've been tracking that pretty closely. My long-term call on yields has been lower, and we got down to one threshold, and now we've had quite a sell-off here in the bonds. This ETF tracks the 20-plus year bonds and 30-year bond, and all those with the shorter maturities that are still out there. And I want to see what happens really on the next leg down, because the pattern I'm using to just get a feel for what this thing is up to is, well, I'm going to take, not the one I was originally thinking of, but I'm going to take this one. So we're definite buyers at 138.40. It's the lowest risk place that we can find to do. You could get in there with the 138.41 bid, risk a nickel on the stop loss. All right, that's another thing, another trick we can do with the hidden pivot method. This P, this red line, midpoint pivot, is such a beautiful, precise, like a precise indicator, or precise telltale that we could use a nickel stop there to try to test the water at 138.41. If the stock goes a little bit higher, it would change our point C. I want to move this coordinate up a little higher. My long-term forecast calls for significantly lower interest rates, meaning big treasury rally, meaning this thing is going higher. And if we're going to project a longer-term target with it, it comes from this pattern right here. So we could see TLT getting, first of all, to 145.74. That would be my minimum target if this thing starts to pick up steam again. We're certain to get some sort of resistance there because the pattern is so clear. But any pop through that would give me, if not certitude, certainly a high degree of confidence in the long-term treasury paper market, in treasury bull, I should say. Let's see, Elon, Rick, what do you think about Tesla as a short-term short? Well, when you say short-term, remember, I can be shorting this on the 15-second bar chart. So when you say, how do you like this stock or that, Rick? The question, the true question is, well, I could say I love this stock on the 1-minute chart. It's been in this great rally for the last 32 seconds, but I don't like it at all on the 15-minute chart because blah, blah, blah. And, on the daily chart, it's actually in a downtrend. So my opinion about a stock is usually specific to a time frame. But yes, within the obvious I don't even know what the noun is here, but sometimes the uptrend or downtrend is so obvious that it should orient your view of all the lesser trends. So I'm going to give away another super secret, and I think you're going to want to hear more about it if I tell you, but basically any really powerful trend move like a bull market, in correcting, when it's tracing out a lowercase ABC to correct a pattern, D does not get reached. The reversal comes from the P midpoint of that corrected pattern. So you would not believe the number of tricks that you can do with that little secret. All right, so to look at Tesla as a short, the way you would do it is the way we actually short Tesla is this reverse ABC pattern. And to not give away too much of the store, just the candy shells in the back, the reverse ABC trade works best when you've got freaky moves like this, when you've got spikes where most traders are kind of disoriented. They're going to kind of wait for the dust to settle. Those are exactly where we take the trade. And the reason being, and this is something that will have occurred to those of you who have traded for a while, good trades never originate in the comfort zone. In other words, if you're thinking, I really like this thing here, I'm going to buy, it's probably because it's been in some very obvious uptrend that everybody sees. So you'll notice that typically your best trades occur in spots where you yourself are nervous, where you're doubting yourself. Those trades, everybody else doubts for usually similar reasons, mainly because of what they see on the chart. And so the RABC trade, the reverse ABC, is geared to initiating trades at the point of maximum discomfort. So our short would have been right here. And I'm not going to say too much more than that. If we were to short, I don't know why you want to get short this stock, but that's another nice thing about the hidden pivot method. It's one of the few trading methods where if you're trading a day when the Dow is up 800 points, the hidden pivot method will give you the only successful shorts that you'll find in that whole day. It's very good at trading against the trend, and certainly good trading with it. But if you're going to short this little piggy, I wouldn't attempt it before 252.65, and even then, I would execute it by way of of what we call a counterintuitive entry, a CI trade. And if you want to know more about that, stop on by. Long-term Tesla, let's take a look. I'm sort of interested in that myself. We do have a chat room, and there's a less formal place called the coffee house. And we have a guy in the coffee house who, it's like he's out there watching Tesla parking lots where they just get on before they're shipped on a boat. He hates Tesla, and I love Musk. I think anybody, unlike some cretin like what's his face, the guy who founded Uber, just a digital app. Musk troubled himself to make a real product, a beautiful one that's very fast. And I think he deserves credit for that. So no matter what they say about Tesla, I really like them. All right, so we've got a pretty good impulse leg on. It's not impulsive on the weekly chart because we didn't get by those two required peaks that I mentioned earlier. But it's well, let's come down to the daily so we can get a better handle on it. Here is a true impulse leg, and it gives us a feel for what might happen. What might happen is, let's get rid of the small lines here. If let's see, red, green. All right, let's see, do that one. All right, so it looks good for a stall at 255.54. This may be close enough that we've seen it already. If Tesla pops through 255.54, I think Musk is going to be in good shape because the stock will be signaling more upside to at least, well, to probably $300.08 to be exact. Request for MRO. And again, at the end of this session, I'm going to tell you how, if you're really interested in doing what I do, and so many subscribers have learned, I've got a great package to get you everything you need. Not only a mastery of the hidden pivot method, but an opportunity to play it off experts in my trading room. So they're all there. One unique thing about the Rick's Picks trading room, or if not unique, certainly unusual, is that you've got at any given time dozens of people among many more who've taken the course who are on the same page, technically speaking. So they all speak the language. It's one you can learn relatively quickly. This was a beautiful counterintuitive short from somewhere around here. And I'd wait for it to correct a little bit more. The big pattern, let's see what the big picture recommends here. Well, it held the midpoint pivot for quite some time before breaking below. I see, it's almost like reading tea leaves. I see a struggle ahead for Marathon, nothing particularly bullish or bearish, but if it really breaks down, think about buying at 1021. That'll be a logical place for a turn. Let's see, Srinath wants to look at ZS, please. Is that a stock? Z-scaler. Z-scaler. I don't know what. That's one on me. How can it be a two-letter NASDAQ symbol? They must have paid up for that, or they had friends in interesting places. Just generated an impulse leg with this low here, getting slightly past that external right there. So I would expect that once this thing fills the gap, you better get real suspicious. If it does do even that well, it fills the gap. But I don't think this stock intends to fulfill this bigger, ostensibly bullish pattern right here. If it does, you know, if it just keeps going past the gap, then for sure trade that. Come on, trade that 73.31 midpoint pivot as your minimum target. Ulysses asked for oil and oil stock XLE. S&P Select Energy Spider Fund. The key, as far as I'm concerned, to the whole chart is that this high took out that external right there. So I'm more of a believer in this rally than I am in the completion of this huge downtrend A, B, C. Let's take a look at where that downtrend stops relative to the big picture. All right, so it did what we've talked about a half a dozen times. It reversed from the midpoint pivot. If a big trend or any trend, even on a 1 minute chart, is going to reverse, is going to correct and is going to reverse it all, it will be from that red line. So anyway, as I was just saying, I kind of favor the uptrend for a couple of reasons, and we'll have to come all the way down to the marquee low, which I don't particularly like, but we're stuck with it. That's all we've got. And so my big picture forecast, oh, surprise, 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 again, going the other way, you see that a stall has occurred at that midpoint. I would have cautioned you there. And it stalled also because we've got these ascending highs here that the riffraff, village idiots, and hoi polloi that we pray to be trading against, they've all noticed those highs too. But the hidden pivot target gave us a more precise way of anticipating a reversal from there. But I think it's going to reverse again and continue higher. The pattern I would trade is this little one here, A, B, C, and go. Not sure if the NG request here is Nova Gold or natural gas, but Nova will become an enticing buy when we come down to this low and threaten to break it. The threat is really what gives us a lock on what I call counterintuitive trades, the CI trade. It's one of the hidden pivot secrets, but while we're waiting for it to come down there and generate one of these beautiful CI trades, we can easily go on a lesser chart to find something to do. If it doesn't get there, if it doesn't go all the way down to where we want to buy it, we don't have to be left choking on dust when it goes the other way. We can get a fine sense of when things may be turning. In this case, I'll use that little peak right there at 645. Anything above that generates an impulse leg and gives me something bullish to trade. Another request, IPOA, Social Capital Head Sophia. Huh, well, ain't that something? All right, so we'll look at the daily chart just to get the lay of the land. What the heck do these guys do? Right, they run hot dog vendor carts all over the world. All right, well, it signaled a theoretical buy signal, and we're not risking too terribly much to take it. We'll risk 30 cents on the stop loss to get to 1088. I don't like to trade one-to-one, risking $1 to make $1, but here your more ambitious possibility is 1145, which would become an odds-on bet if this thing pops through 1088 the first time it encounters it. A look at British pound December request from Gary, and let's see. Well, I'm going to use this guy right here. Actually, no, I'm going to use something slightly different there. Hard to believe that sludge like the British pound could actually be in a bull trend, but But every dog has its day, as the saying goes. And this dog is going to get to, it looks like $1.26.90 on the daily chart. Nice pop through that midpoint pivot was telling. It did say whatever it pulls back to, we want to get it for that shot to 126. So maybe Boris Johnson will get things straightened out there, and the Brexit will not be as disruptive as some might imagine. To get a more precise target, let me see if we can do it this way. Well, I'm looking for a 1-off A, which, as I mentioned in passing earlier, gives us our most accurate targets. And yeah, we have one here. So let me, all right, so I'll give you a lesser pattern with the target. Well, I would have told you to be careful today at 126.04. It got within, well, 2/10,000ths of a point. So, but I think it's got more to go, and you've got my target there. Amazon, request from Charles. Let's back up a little bit so we can see what we want to see, or as much as we want to see. All right. I use TradeStation because, mainly I had a business relationship and a friendship with a guy named Mike Barna, who was one of the great, he's one of the great algorithm developers on the planet. You can find his work at tradingsystemlab.com. His partner is John Ehlers. Ehlers is somewhat better known because he's written some books. But Mike did a lot of programming in C language systems for TradeStation. And one of his best was called R Mason. It was a best-selling algorithmic trader of S&Ps. So I stuck with TradeStation for a while when Mike and I were fooling around. And he did tell me at the time that it would be very hard to algorithmically automate the hidden pivot method. At that time, I was capturing a lot of information that I was using it somewhat subjectively, but I would say much less so now. That's something for you to discover if you decide to take the hidden pivot course. So Amazon is ornery but still bullish, and the pattern I would use to get its number is right here. It looks to me like 1925 is a good minimum number to shoot for. That's a $100+ move. So there's definitely something to trade there. And I'll mention one other thing. I did say earlier that we can trade anything on any chart of any degree. So when we're trading an $1,800 stock and we want to risk bupkis getting in or out, we use what I call, we can go down to the 1-minute chart and we simply trade the 1 minute. We can use the RABC or the mechanical. Typically in Amazon, the trade method, the entry method that we use most often is called the mechanical entry. And we use that because it is the one type of entry that allows us to use a limit bid to get long or a limit offer to get short. There's so much slippage in the stock. It slips around so much, and the jumps are so wild that you can have your bid in, and it might take you 10 minutes to know whether you've been filled or not, especially if you're using a buy stop or sell stop limit to get in the stock. So we use mechanical bids, and believe it or not, when we get in, if we get a signal like, all right, let me see if we can sort of retro engineer a trade in this stock. All right, so P2 is a good place for a trend reversal. So if it's coming down, down, down this morning as it was, and we think we want to buy there, then if we buy there, well, I'm not even going to get into the stop loss, but if we go, let's say that all right, so our buy point is somewhere in the vicinity of 1820.54. So we go to the 15-second bar chart and find the same action. We're able to qualify this. Well, we had all right, the way I would trade this, again, I just told you that we want to be entering on limit bids rather than buy stop limits because of the slippage. But let me just mention that one way to trade it that's a little more difficult is right here. We're going to use a reverse ABC. And in this case, I would say we'll put a buy stop limit in at 1821.09. We'll shoot for just a mini move here with a $1,800 stock. Just a red line, a move from the green line to the red line is worth a couple $100. So if you're trying to make a couple $100 in a day, you only have to do this once. But again, it's a hard trade. This one worked. You can see from that low down there, if we'd actually been able to buy the stock, it did make it to the red line. I take off half the position there, maybe shoot for this up here. That would give me an additional $240 profit on 4 round lots, which is typically what we trade. But again, what I'm trying to demonstrate here is that even for trading an $1,800 stock, we can get our risk down to, in this case, a theoretical 45 cents per share. So we're risking only $45 or $180 on 4 round lots. And I challenge you to find another trading system that lets you kill it in Amazon using trade entries where your risk is, in this case, well, we can do it even lower. I could show you what I call camouflage trades, but the point of it is you've really got very tight control of risk, no matter what you want to trade. Request from Robert for advanced micro devices. Let's get off this 15-minute chart to one that gives us the lay of the land. Here, let me get rid of that. And what makes sense? The stock ain't doing too much. Notice that it's trading about where it was in April. It's had some swings, but net going nowhere or almost nowhere. The tradable pattern here, I want to be getting a one-off 8 rather than this what I call marquee low there, but I'll take it just for the sake of this demo. It's having trouble generating thrust. It tripped a theoretical buy signal at the green line. That's 31 point, looks like 19, and it's just struggling. The larger trend is up, and you need to draw a really gnarly pattern. Actually, let me get on the weekly, so it might not be so gnarly. All right, so here's one that makes sense, really. It's certainly clean, and we'll lay on the lines, and it gives us a stall at P2. We typically want to trade that. We want to get short up there. If at P2, the secondary pivot, that's midway between P, the red line, and D target. If we struggled here, there's more of a chance that we're going to stall at P2. So this was a cautionary point for us. But the bigger chart still looks pretty good, and it's okay for a possible shot at 41.13. But if I were trading it, there's no way I'd just jump in here and say, come hell or high water, it's going to that number, and I'll put a stop loss below that low. You could put a stop loss below that low, and that would work for me. But that low happens to be $26, so you're risking, $200 plus per round lot. I want to risk more like $20, $15 per round, or 20 cents per, $20 per round lot, 20 cents per share. So this is much more than that. Request for WM, whatever that is. And again, we're getting toward the tail end of requests, and I'm just going to give you a little information on how you can take advantage of a great package that will make you, when you've gone through it in a grad school, a Zen master of the hidden pivot method. Here, we have to take, all right, this is the one I would look at initially for waste management. And it's pretty bullish. When something blows through a clear D target, as this has, it's a safe bet to trade it even higher. So let me see a monthly chart and see if I can make better sense of it, of the bigger trend that's at work. There's nothing real crystal clear here. So the one I would tend to grab to get a handle on this thing is right here. Interesting. All right, well, if you'd come to me back in, well, even in September a year ago, I would have said we got a shot at 122.26, but be careful when it gets there. And it's a little too late to be giving you that warning, but you can see how that pattern that I selected without knowing what it was going to produce in the way of targets, how it did really call the shots here. This high is 49 cents off where I would have projected definitely a tradable high, shortable high, get some covered rights on if you're long high. All right, so pretty good move here. And I think we're going to do some more correcting for the next few months before the stock can even think about pushing through 122.26. But come back to the daily, and you'll find ways to trade it in the interim, even ways to spare you the pain if I'm wrong and this thing, without a 2 or 3 month correction, simply takes off and gets rolling upwardly again. Let's see, CME, did we look at that earlier? CME Group. The best way to find a good pattern is to take the one that first jumps out at you. Again, I'm a little too late to deliver news that might have been more useful to you. Let's see, 2 months and 2 weeks ago, 10 weeks ago, I would have said, hey, let's look for, we got a possible move to 225.51 and minimum to this number here. That's 208.74. So we had a nice trade there. And when it blew through here, you can see how the hidden pivot levels really map out the whole thing. It's a stall at P2. When it finally got going again, it made it up to that D target and got us out at a good time at, let's see, 491 is got us out 60 cents off the top there before what was a pretty nasty move. Well, I have to say hindsight is genius today. A look at Barrick. All right, the pattern that makes sense to me here. I'm going to start with the less ambitious one here. We got a little bit past that, which was saying this pullback here is going to give way to another uptrend phase, another bull cycle. But when we come here, nice, it's a little bit of a stall, and then it finally pops. So I still think we got good odds here on Barrick of 2167. That's where I think it's headed. And be careful up there. And we may have an alternative target that is based on this pattern right here. So we've got a target at 2167 and another at 2117. So in that range there, might be looking kind of toppy, but those targets will be viable. The lower one will be if this low at 1693 holds, and the other at 1585 would have to be broken to negate my target forecast for this stock. And some of you, I mean, if you've seen somebody kind of work the numbers, do a little technical analysis, Roy Blumberg on the old CNBC, he was a Zen master. He was replaced improbably by Maria Bartiromo. She didn't know Duke back then, but she sort of picked up a few skills. But if you've seen a technician on TV work the numbers, you'll notice that they don't get as much useful information out of their charts as quickly as I can. So that's another virtue of the hidden pivot method. It's all just a couple of simple visualization tricks, and you're there really plotting important highs, lows, and entry points. We've got Quest for Silver, Majestic Silver, very popular stock among my subscribers. And it's getting a little cluttered here with, I mean, this is, everybody sees Head and Shoulders wherever they look, but I don't like the pattern in particular. This is the one I'm going to use because the other one was so congested over the last few weeks. So minimum upside here to 1297 with potential, and if we're in a major bull market in gold, as I think we are, you could be looking at 2134 on this stock. But again, I'm not going to get out there too aggressively with that forecast because I want to see what this thing does first at the midpoint pivot 1297. But for now, that would be my minimum upside target. You're definitely going to get some sort of stall there, maybe a tradable pullback. So be careful. All right, crude. I hate crude because it's such a bear to trade, but we can still do it. We can tame any vehicle, cut it down to size. I mean, look, this thing's just shredding the unwary. We're never unwary, stupid, or fearful because we've got ways. Whenever there's panic or fear, we don't get involved in that. All we see is impulse legs. Impulse legs are where it begins for the hidden pivot method, and where someone might be at a high point of anxiety here as to whether this high is going to break out above that peak. We don't give a care. It's just a question. If it gets through, it's impulsive with a corresponding ABC pattern. If it doesn't, it doesn't. We still have ways to trade that. And there are ways of using points of high fear and anxiety so that you can basically come up even with the soybean trader who's been at it for 40 years, who when he sits down next to you at the $100, $200 poker table, smoking a cheroot, wearing that cowboy hat, you wouldn't want to be playing poker against him, but competing in this arena, you can. We don't typically play poker in an arena, but anyway, you get my point. All right, so I like a play to, assuming this low hold, 67.05 would be my number, but with all the and notice that whenever I'm looking at an uptrend, there are also downtrends to look at. There's Big Bertha here, A, B, C. And so we always need to consider those things, particularly when we're trading. I could, with my method, if you were to say, Rick, I've got a gun to your head, get short. Well, getting short simply means going to a time frame where we've got a downtrend and an ABC pattern. You know, you might like this stock and say it looks bullish over the last couple hours, but I'm going to tell you that over the last 3 minutes, it's in a downtrend from that high to its current at 58.81 to 58.80. It's in a downtrend. So if you're saying get short, then I'm going to find that downtrend. That's almost too little to work with. But I'll go to the 10-tick bar chart. Well, even there, it's not giving me much to work with. But it does give me a prospect here. I'm going to take a one-off A. I like that. I like the sharp little B there and the stick down C. So for reasons that you're going to have to take the hidden pivot course to learn, to understand, this is a gorgeous little pattern. And it gives me the wherewithal. I would short, if you tell me I got to get short, I would get short, not at 58.83 necessarily, because this system is so precise that it nails it. You don't want to put an offer at 58.83 and not get short because it stalls out at 58.82 or 1. So I'll put a short at 58.80, let's say 2, and I'll put the stop loss at 58.85. So you held a gun to my head, and I gave you a good shot of getting short there. And if it stops me out, I know it's going to 59. So I'll give up 4 cents there on that cute little mini trade to trade the reversal. And another thing you can do with the hidden pivot method is know that when it takes you out of a long position, hell, get shorted. All right, so that's crude. What else we've got? CRON will come off and those of you who've stuck around, meaning just about all of you actually, I certainly appreciate your kind attention. All right, we've got a pretty clear little pattern here. And there are visualization tricks you'll learn to spot these patterns instantly if you take the hidden pivot course. And I do have a great package. Anybody who's here certainly deserves the benefit of the offer. Look at the way this thing sliced through the red line the first time it kissed it today, actually. It's going an 8.96, and I'm gonna leave it at that. I think I like this pattern, and if it gets down there, back up the truck, because you can buy right at that price or maybe a penny above it with this as tight a stop loss as you've ever as you might dream is possible. Request for AT&T. We've got a lot of requests here from, looks like these are write-in requests from people who are not in the room, but I hope that the things that I'm saying about these stocks will benefit all of you. Pick and choose your trades, whichever analysis you find most compelling, that could be a trade for you. Telephone is, all right, well, it's pretty wicked. I mean, we're back to where we were in 2013, and ain't that great? I don't know. There's no, the big picture, going to as big as I can give you here on the monthly chart is, I know you want the big picture, but it would have come from this pattern here. Well, no, the most I could have given you was, well, 45.02, and I would have gotten you out pretty close to the top there. But there's nothing, I've used up this external peak. So in order for me to give you a good long-term projection, we need to create a new impulse leg by going above that little guy right there, that external peak. So otherwise, we're just stuck with smaller stuff that's really not as meaningful. You know, a 10-year target or whatever, that was used up right here. So other than that, we've got this uncorrected so far impulse leg. It got past 1, 2 external peaks. So it's a good impulse leg. Any pullback in telephone is going to be a buy. It's going to be corrective, provided it doesn't go beneath that low. SLVRF request. Dave, you're going to have a lot of people to mail on this just to bring them in. All right, so let's take we don't want to be on a monthly. Daily's good enough for Silver One Resources. Here is the obvious and very usable pattern right here. And it's having its difficulties here. I mean, it's really struggled, wild oscillations around the midpoint. I think there's good reason to believe it's going to get to 40.83. That's where I think this hokum is headed, and that target will remain valid unless it takes out the point C low of the pattern at 21.28 pennies. Another request from Skeena Resources Limited. Well, you can make bullish or bearish projections for the stock, but I'll stick with bullish because most of what's happening in the chart is bullish. Minimum upside here to 35.28 cents. Be careful. If you've been careful on the 16th, just a few days ago, you were within within 3/4 of a penny of that price. If it popped again and hit it, I'd be careful again. It might be one of those false moves, but if it doesn't and blows right through it, you at least have a 44-cent target, 44.5 cents to shoot for, because that's where I think it would be going. We've looked at Krone already and request for U.S. Steel, which no bottom on this thing. Let's see, the pattern that strikes me right off the bat, that's the one I want you guys to use too when you're working these patterns, is, why have I missed by a couple pennies here? Let's see. That didn't help. 49, 34. Well, I'm going to take the one off because it's there. It's one of the mysteries of the hidden pivot method that these one-offs just work. All right, so doesn't look good. If it touches, I think we'll get a tradable scalp. You can buy there at 9.49 if it gets down there, and you'll get a nice bounce. You'll get a good ride. But I can't guarantee you it's going to go very far. And if it takes out that 9.49, you've got downside risk all the way to $3.10. That's my worst case for this stock. All right, one more stock here, and then I'm going to show you how you can get the deal of the century to learn pretty much all the cheap parlor tricks that I've been doing for you today. Trust me, you can learn them in a month. And you can learn good stuff that will get you in there trading in just, 12 minutes. Yeah, I can't, it's like a rabbit coming out of the hat. You know, if you ask a magician, how the hell did you make that elephant vanish? And he said, well, it'll cost you $1,000 for that secret. And you forego your 1,000. He tells you how he made the elephants vanish. Of course, it's all smoke and mirrors. And you say, oh, well, that sucks. I mean, I can't believe I paid $1,000 to find that out. But it's similar with the hidden pivot method. The actual secrets are relatively simple, and they work amazingly well. When you get a hold of a few of these reverse ABC trades and make back the price of the course in 46 minutes, you'll begin to understand. All right, so let me show you. We do a Wednesday tutorial every week for people who have taken the hidden pivot course, and if you've taken just 4 or 5 of them in recorded form or live, you'll be at the master's degree level. This is my actual trading screen. I have a partner, Scott, a fellow who lives in Utah. We get together at 8:30 every morning and discuss what we're going to do. The only trade I've signaled here for today was in the T-bonds, and I was using a reverse ABC to get long. At the time we were talking about at 8:30 in the morning, I was looking to get long on a pop to the green line. The trade worked out fine. I haven't actually spoken with Scott to know if we did the trade, but other trades, it was a pretty dull day. Anything that's in white here was just, we're looking at it, but we don't see anything particularly hot. So with that, let me show you the deal of the century. And I do appreciate that so many of you have stuck around. Where, oh, here it is. All right. So, yeah, most of you who were here at the beginning of the hour are still here, and I think that's great. I really do appreciate the attention. I assume it's because the interest is high. So let me show you a little bit about this deal. I've been telling you many times how, if you really want to find out how I did this, take the course, or if you don't want to take it, there are ways to get there slowly. You can take a free trial subscription to Rick's Picks just by going to the home page and clicking it. You put your name and address at the top. But let me show you the deal that I've been talking about. All right, so let's see. We want to go into Presenter's View. Presenter's View is right here. And we want to, because swap presenter. All right, the package is worth $4,492. It is, I've taught the Hidden Pivot course, everything, nothing more than you would learn. I've taught it live over 2 days for $2,500. I've managed to condense everything into a beautiful, tight, three-hour course. So that's a $2,500 value. 3 months of Hidden Pivot tutorials. I mentioned that, $147. These are kind of a graduate studies course. You come every Wednesday. It's not chalk talk. We're not there to say coulda, woulda, shoulda. I want you to come. I typically tell my students to come there ready to pull the trigger, because we look for actual trades. So it's not a theoretical thing. The recorded library, everything. This will give you, if you were to sign up for this deal tonight, you could actually take a recorded version of the full course given last month. It was a Jim Dandy 3 hours. It was very tight, and it was really my best effort yet. So you could actually do the course tonight and start looking at recordings of the Wednesday sessions where we're doing these RABC trades like crazy. 7,000 annotated charts. You'll have access to really a whole inventory of patterns. These aren't meant to be pored over. They're simply things that you look at, you sort of put them in the back of your mind. The good ones will stick. The patterns that you see that you like, they will be there, and you'll see them on real charts in real time, and they'll make you money. And adding to that, I extend your subscription to Rick's Picks. It's a great way to actualize your Hidden Pivot knowledge, because there are hundreds of people in there over time who have taken the Hidden Pivot course, and they're a very helpful bunch. They love to answer your questions. Bonus 2, I will give you an additional 9 months of those Wednesday tutorial sessions, which again, you can take either live, if you can come at 11 a.m. on Wednesday mornings Eastern time, or if you miss the live session, just simply take the recording that's usually out later that day. And bonus 3, if you would like a one-on-one consultation with me, maybe you've got some hurdle you can't get over, I'll give you half off my normal $400 an hour rate. So that $4,492 package, I'm offering for $997. I put all of these things in a package because they really do, they will complete your learning. This is, if you're serious about learning how to use the Hidden Pivot method to trade or to forecast and to analyze, this package has everything you need in it. And again, people paid close to $5,000 for the full range of benefits. To get that package, go to rickackerman.com/web deal. Again, if you do it tonight, you get all of these goodies, and you'll be ready to come in the chat room tomorrow with a fresh set of eyes that sees the beauty and tradability of all these ABC patterns. You'll see in the course, you'll learn, I've added a new one because that RABC method of getting into a trade is so potent and it's so easy that we could say that there are really 6 powerful entry tactics. You don't even have to master 5 of them. You could stick with the RABC or maybe the mechanical, and you would have enough really to fulfill you. So if you want to see some of these entry tactics used in real life, then go to a demo. This is rickackerman.com/demo, and it's a presentation video that shows me how to do some of these, use some of these entry tactics on real charts. So again, to go to the demo, click rickackerman.com/demo. But if you're just can't wait and you're eager to sign up, or you know that you're going to take the course, you're going to get good value. And if you do it now, that's rickackerman.com/webdeal. So /webdeal or /demo, depending which interests you. But in any case, I would strongly encourage you to come to the Rick's Picks. If you let me find you the homepage here. rickackerman.com, the top of the page, just fill in your name, address, an email address, click start my free subscription, and then you can go right into the trading room, which looks like this. So that's it. I hope that I've provided information to you tonight with some of these looks at charts that's going to make you money. If you want to make your own money, then you could do worse. You couldn't do better, I don't think, than signing up for the package that I just showed you. So with that, I'm going to wish you all a very pleasant good night. And I want to thank you again for coming to this session. And I hope to see you around in the chat room.